Cathie Wood has gone all in on this particular stock, which means you should probably be considering buying it too. And that's exactly what we're going to be talking about in this video, what this stock with this huge potential is, and more importantly, how to play it. Now, I'm sure you already know who Cathie Wood is, but just in case you don't, she is the CEO of ARK Invest. They're a big fund with their market value is worth over 16 billion now. And the reason you've probably heard of her is because she is now an investing super celebrity, especially on YouTube. People are obsessed with her. And more than her, obviously, it's her investments and her fund. Because basically any stock she touches turns to gold. If she sneezes and it sounds anything like a ticker symbol, you can bet that stock is going to be up 100% overnight. She basically got that Midas sneeze. At this point in time, you could pretty much create a strategy to follow her into every stock. And that's what a lot of people are doing, and it's working great. Or a lot of people invest in the ETFs that they have, the ARK ETFs. So Cathie Wood loves to invest in those industry-changing companies. And this one company that she went all in on is no different. And this company has huge potential to change not only its industry, but all of our lives, which means it could have a very explosive stock price. Now, this incredible stock that Cathie has more than $1 billion invested in right now is none other than Invitae. So let's go over what this company does and why its stock price is so lucrative. We'll start with its backstory and fundamentals and then run into the technicals right here. So here's their website right here, Invitae. It's spelled so interestingly. They gave it such a complicated name, they got to teach you how to pronounce it right away. Invitae. And you can see right here, your health starts in your genes, meaning that this is a genetic testing company. See this lady? She is super excited to get her genetic test. I don't know what that face is. Smug? She already knows her genes are great. I always wonder how they pick these models for these random companies and websites. Oh yes, darling, you are the essence of Invitae. I can see it now. It will always remind me of Joey on that STD poster. But yes, genetic testing. Build your blueprint for a better health. So there's a lot of different uses, of course, one of them being starting a family. If you know what's going on in your genetics, you know what you're at risk for, and you can make health decisions based off that information. For example, you don't want your kid born with a tail or something. My parents would always make fun of me saying I was born with a tail, even though I'm pretty sure I wasn't. Not sure what their goal was in saying that, but now I base my self-worth off how many views I get on the internet. So thank you, parents. Cancer is another big one. You want to see your personal predisposition for cancer because no one likes cancer unless you're a Taurus, Virgo, Scorpio, or Pisces, because in that case, you're actually pretty compatible. And of course, general health right here. Everyone is obsessed with their health nowadays. So they do crazy stuff in the name of health. Like this hobbit hippie CEO of Twitter, Jack Dorsey. He spends days not eating anything, just drinking water, all in the name of health. And that's why he looks like this. But hey, maybe his Middle Earth genetic disposition is suited for something like that. This test would tell him. So basically, you can go to Invitae and sign up for a test and they'll send it to you. You see millions of people have done it already. You order it online and they send you a little package. You pull out the little test tube that comes in the package and then it will whisper in your ear, "Spit on me, daddy." And then you of course give it what it wants and you send it on its way. That's when you get your results. Then eventually they do the processing and you get your results and you could take action based off your DNA. And Invitae helps you with all of this. They take you through this process. They have all your data and they analyze all of it. And then they send that data to Bill Gates so he can move forward with his secret eugenics plan to cleanse this earth of all the less than desirable people. No, I'm just kidding. Billy G has nothing to do with this that we know of. So you understand what their business model is, right? With their genetic testing, because you've seen things like it before, such as 23andMe. So you're probably asking, what's the difference then? What makes this company so special? Well, the big difference is shown in one of their graphs right here. They're building an entire platform. They aren't just like these other companies that just send you the genetic test and then give you the results. They're trying to take you through this whole process. See right here, menu, services, platform. And there's all these different companies involved because Invitae has been going on a buying spree, acquiring companies left and right, just buying up everything like me in a donut shop. And the idea is they want to offer the full service every step of the way, not just showing you your genetic results, but telling you what to do with it, telling you to actually eat some food and take that ring to the volcano. So they're in this race in this industry to dominate it. And this is very expensive and it's risky because it's all or nothing. That's why they're making all these acquisitions and they're building this huge connected platform. They want to be the biggest and the first player because that first mover advantage is huge, especially in this industry when we're dealing with data. And that's what you got to realize about all this genetic testing. To sequence a genome, it's tons and tons and tons of data. And data is the most important thing here because like I said, I was joking about Billy G collecting all our data, but this company is collecting a lot of it. And if you have more data, you can make more insights and have better genetic testing and more insights from that testing. So you can see right here, one of the big things that they're focusing focused on is how many tests are they getting out. So they got 170,000 samples in Q3 2020. And this is something that they track closely. They're always trying to increase this. Not only because they get paid for it, that's how their business runs, but because they're collecting that data. They also track how expensive it is per sample. They're trying to make it as cheap as possible. So their play here is that they're going to make their genetic tests way cheaper than everyone else so they can undercut the competition and dominate. Again, this is a strategy that is going to lose you a lot of money in the short term, but over the long term, it should really pay out if you become the number one in that industry. And once again, going back to data becomes a huge barrier of entry. It becomes a huge moat because you know how they're sequencing this DNA and how they're analyzing it? It's through AI. And if you watched our previous videos on AI, you know the most important component of it is a lot of data. So everyone has the same AI models. That's not where the differentiation comes. The differentiation is what data are you putting in, because it's the idea of garbage in, garbage out. So you want to be putting the best stuff in. And the more data you can collect, the bigger your database is and the bigger your advantage is over your competitors. So even though this is a genetic testing company, it is also an AI company. And nowadays, a lot of companies are AI plays because, once again, data. Amazon, they have so much data on consumer purchases. Huge advantage over everyone now. Google, same thing. Facebook, same thing. So when you track this company and you see what it's doing, keep in mind that they're trying to become the biggest and they're trying to do that through their data collection. So they'll make as many acquisitions and whatever they need to do to make that happen. Now, like I said, the company loses money, and that's because they're going for all or nothing. And betting on the stock price is betting that it's going to work out in the future. And that's exactly what Cathie Wood is doing. So, okay, we know the business model, we know what the idea is here, but how do you actually play it tactically? Well, we could jump into these technicals. And you can see from the March lows of last year, this thing went up almost 730%. 730%. It shot up. It has retraced a bit now, but that might offer an entry point. So this is the weekly chart that we're looking at right now. We could zoom in on the daily. And if we go back just to July, what do you see here? It's a pretty nice trend. Now, of course, you don't have to look at any of this stuff if you want to be like Cathie Wood and just buy and hold. Then you're doing it more based off the fundamentals. But I like to add those technicals in there so I could do what? Control my risk. Say it every video. So if you do play it more tactically like that, you could see right here that this stock often comes and touches its 50-day moving average, this yellow line. But this is a good example of the problem with trying to trade too. You can see it slices below this 50 moving average multiple times and then rebounds. So if you had a rule in there saying, hey, I'm gonna buy when it touches this line and rebounds, and then I'm gonna sell if it breaks below it, well, you would have been shaken out a few times. Now here's something I used to do when I was more of a discretionary trader. This 50-day moving average, I would go and edit it and turn it into a 65-day moving average. Now look what happened to this line. You don't see the stock price breaking through it. Actually, it looks like it fits even better. Now here's the thing. I'm not trying to overfit a line to whatever I want it to say, because you definitely can do that when it comes to technical analysis. But what I'm trying to do is take out some of the whipsawing. And why did I pick 65? I don't know. You could do whatever you want, really. But I'm just trying to go a little higher than 50. So I used to go from 50 to 65. Because if we go back to 50 here, you see these little dips below, right? What could be happening is the bigger players just shaking out the smaller players. So what they can do is run your stop, because they know everyone put their stops right below this line. So they'll sell until those levels are hit so that you cash out and they buy those shares that you're selling, and then they run it back up. And it can be really frustrating when you're a trader when this happens, which is why that one easy trick I would do is just change this to a 65. And then there you go. You aren't going to get your stops run as much. So that's just one trick you can do. So next time you see it touching that 65-day moving average, you can buy if you believe in the stock and if it's part of your strategy. See right here, it broke through. Will it rebound back above? Possibly, and that may be a buying point. Or it might stay below this level and then you're going to need to wait longer. Other people might wait until it hits this 200-day moving average, which is this blue line. It's really up to your strategy how you want to play it, but the important thing is using these techniques to manage your risk so that you don't ride this thing all the way down into the ground. And just because you're trying to invest in the same stocks as Cathie Wood doesn't mean you're Cathie Wood. She has a way different strategy. What did I say? They have like 16 billion? What's your account size? You actually have an advantage with a smaller account size because you can move in and out. Cathie can't do that when she has over $1 billion invested in this one stock. She has to pretty much buy and hold. But looking at this chart, a big reason why I switched from discretionary trading and looking at these charts to just more of a quant approach, because I rather catch this entire smooth move higher rather than these little ups and downs. That's why I like my momentum strategy. But my strategy wouldn't pick up this stock, and this stock obviously looks pretty great. So again, it comes down to what is your strategy. And if you love a big trend like this in genetics because you know it's going to explode over the next few years, then you're going to love this other trend that we're tracking. And this one's just as big, maybe even bigger. It's going to play out over a few decades. We've been tracking it, including which stocks to buy to play it. If you want to see that, then click this video right here. Again, it's a huge multi-decade trend where we can make a ton of money. So click this video right here and I will see you there.